everybody. Welcome back to another episode of VCTV, which is the Venture Capital TV from La Token. My name is Sunny Mohanty. I'm the regional director of La Token based here in Singapore, and I'm the host and moderator of VCTV. Great to have you all back on Thursday. This is my second show of the day, and I'm really excited coming back on VCTV. And today we're going to discuss about. Sorry, I hear myself talk. So today we're going to discuss about raising early stage capital for startups. So let's have a quick round of intro of our speakers. Hello. Hi, everybody. Hi, Adrian. Hi, Dr. Srikanth. Hi, Nicola. Good to see you after a long break in the sense on VCTV. How are you all? Adrian?
Very nice, actually. Just disclaimer for the audience. Me and Sonny, we had a coffee in Dubai at AABC Summit, so it was pretty nice.
What's the disclaimer all about? Well, why was the disclaimer?
After working online
yes.
for, let's say, 1 year, we finally met at that event, and it was pretty cool. And Sonny has still a few days to freedom in her luxury quarantine, which is a dream holiday for many people today, I would say. So I just wanted to keep her mindset and a peak state for her. So that's why I started this way. So should I introduce myself? Or?
Adrian, before you introduce, we had a great time in Dubai, meeting people in person, right? I don't know after how many months did you do that? After 18 months of
15 months from the last in-person event where I spoke. It was in Istanbul, February 2020. 15 months.
Yes.
Crazy.
For me, it was March, I think, in UK. So yes, glad to see you, your family, your girls. Wow. The whole package. Okay, Adrian, let's have a quick round of intro.
Okay, so happy to be here in VC TV LA Token family. Very nice place to be in. My name is Adrian Niculescu. I'm a serial entrepreneur and investor. And my genius areas are sales, marketing, and business development. Besides being involved as advisor or board member in a suite of businesses, I'm involved directly with CloudCoin Consortium. CloudCoin is a post-blockchain digital currency. DAO1, a decentralized autonomous organization. Also, I'm involved as a mentor in Virgin Startups program in UK. In Faster Capital, which is a Dubai-based accelerator and incubator for startups, and also in SAR Global Ventures, which is a VC company based in London. Happy to be here and contribute today.
Great, thank you, Adrian. I didn't know that you're back in Poland from Dubai, but good to see you back in your regular space. I could make out. And welcome back to VCTV family.
Thank you.
Okay, next I have Dr. Srikanth. Hi, how are you?
Good, thanks for asking, and nice to see the room behind you. It's got a luxury suite that you got there, and we in India we don't get such a luxury treatment once we get COVID. I've got COVID twice, and I didn't quite get the luxury treatment that you're getting at the moment. So, delving straight to the point, I am Dr. Srikanth. I act as a legal counsel for Who's Who, and one of the things that I see as a counsel for these family offices is that they are always asking me a question about blockchain / crypto / whatnot. So they happen to hear some conversation somewhere, second-hand conversation that Elon Musk did about crypto, and they want to know the details about it. So I'm here to provide those whispers to you. I'm here to give you the insights or the whispers that occur between the corridors of the family offices, and great to be here after a long, long time, I believe.
Thank you. Just to let you know, I am not COVID positive. It's just the rule of the country that I have to be in a hotel quarantine. So all this luxury that you see is a rule that I have to follow. I have no choice. And welcome back.
I can
Um,
believe.
Next, last but not least, Nicola. Hi, how are you? Long time.
I thought, yeah, it's been definitely a long time. I was actually quite a full time at work, so happy to be back. I'm Nicola Marcella. I'm a legal consultant as well. I work at Store Partners. We are a Swiss-based service provider in the crypto space. We provide services in business development, legal, marketing, and investor relations, with a specific focus on fundraising. That will be the topic today.
All right. Thank you for that really quick intro, and welcome back, Nicola. Where are you, by the way? Where are you dialing in from today?
I'm in Montreux, in our headquarters here on Lake Geneva.
And I met your teammate in Dubai as well. Shiraz was there in
Yeah,
Dubai.
Shiraz Ahmed is our managing partner, and yeah, I was in Dubai. Happy you met him.
Besides Adrian, another person was Shiraz, and many other speakers like Irina as well. She was in Dubai. So, from a virtual world, we all met in person finally. Okay, all set. It's about early stage investment, early stage capital raising. So before we jump into discussing this topic today, I just want to know what is early stage capital raising really means, and how different it is from a seed stage, or is it the same? And how much capital is raised during the early stages for a startup? Adrian?
It really depends, because today we so many investors want to find the next gems and to involve in the pre-seed stage, actually. So I would say that a startup at pre-seed or seed is in early stage, where some money are coming from friends, family, and other fools, the three Fs. And many projects are starting like that. And after that, there are some crazy calculated guys or funds or even family offices these days wanting to find the next gem, involving very early with a small amount for a larger stake, and taking the risk, which can transform a small amount either in dust or in a huge amount if that bet is correct. So the higher the risk, the bigger the reward. And there are many startups which can actually start getting incomes right away. Even, I don't know, advance payments from clients, so they don't need to really raise a lot of money at this stage if they can get payments in advance from their clients, because at this stage usually you don't raise a lot of money and you give away a lot of equity. And for the early stage startups in the crypto space, there is also the opportunity to create a token and to start early sales for this token. So basically, it's a hybrid model for them, because they can sell tokens and keep 100% of the equity at that stage. So I would say that the amounts are between what I'm seeing, let's say 20,000 to 250,000, something like that. These are the figures in my mind. And it's a very interesting stage, because you bet a lot on the team, because the project may pivot a lot on the way.
So did you say 20,000 to 250,000?
20,000, yes, 20,000 to $250,000, let's say.
Yeah. Okay, 250K. Thank you. That's quite a big range, but thanks for that. Dr. Shrikant, over to you with your insights.
I'm sure Nicola would have a. I'm getting a lot of feedback. Is that me or?
No,
Okay.
sorry, I have notifications on.
Okay. I was saying that Nicola would possibly give you a more counselly or a legal response. But if I may take a little bit of legal humor and take a philosophical humor, it is I think early stage is when somebody else believes in your idea. You believe in the idea, and you start a startup, and you have friends, family, and fools, like Adrian suggested. The fools come in when you believe, and they believe you. And I believe the real fools come and kick in at an early stage, when in masses they start believing you, which is quite an early stage, in the hopes that it will convert into quite a huge number. So I've been involved primarily in a lot of early stage deals. So the term sheets that I write are typically early stage, which will have phenomenal X returns. I wouldn't be able to put a dollar number to it, to answer specifically like Adrian, but yes, the X's typically matter. So it could be anywhere between 3x to 5x return that they expect, or even more, in an early stage investment.
Right. Thank you. Nicola, over to you, please. Sorry, I've got a lot of notifications popping up.
Don't worry. No, I would like to make a differentiation. So first thing, I share the views of my colleagues. One thing is to invest in the equity of the company. One thing is to invest in the token. I think that the revolution that crypto asset brought was this different and new type of investments that are made right now. And we also assist companies that basically fundraise only thanks to their tokens, or if they are in the early stage, maybe they look for an angel investor that can invest and also support them in their business activities. So in this case, they will have an investment in the equity of the company. With regard to the figures, yeah, maybe because we are based in Switzerland, a bit higher, but not so much in the end. What we mostly do for our early stage clients is to raise the capital that allows them to finish the development of their platform and possibly launch a public sale of their token.
All right.
So I would say that the minimum budget here in Switzerland is around 100K up to 500K.
100K to 500K. Right. So I think Adrian was talking about blockchain startups in particular. When Adrian, you said 20,000 to 250K.
Yes, 20,000 to 250, and I was referring mostly to the startups in the blockchain space.
Yes, got it.
Blockchain, fintech, crypto, this side.
Crypto, yeah. Okay, coming over to the early stage startup ecosystem. So what did we see in the pandemic? Did we see more dollars getting into this early stage startups, or did we see less funding into this early stage startups and people were investing more into growth stage or established companies? What was the trend like, Adrian? Adrian, you are on mute.
I was unmuting myself. Yes. Can you hear me right now?
Yes, I can.
Can you hear me? Okay.
Yes,
so
yes.
I was seeing two things. First, is a trend which was not so in your face, but now became in your face. The the equity became for real the new cash for early stage startups, and the founders are more than happy. They were pretty reluctant before to share equity with advisors and even with service providers at the beginning of the project in the early stage. There are many stories, let's say, of advertising agencies who which work with startups, and after 3 4 years they say, why I didn't also take some way equity instead of taking the payments and chasing them to pay the invoices, because that startup became so big. So even half of the payments, if it were transformed into equity at that early stage, would be a fortune. And the second trend, which is very close to my heart, I would say, the the tokens, because so many startups can issue tokens, or um, um, uh, they are platforms, so their tokens are native tokens of those platforms, and those tokens started to behave like stocks, and there is a very very thin line between tokens and equity, because initially I said, okay, I'm focused on equity, and somehow I neglected the idea of early stage tokens. But after a while I realized how wrong I was in my assumptions, and even for investors, having
Mhm.
access to early stage tokens gives them liquidity, because otherwise if you have an investment in an equity, um, uh, 2 3 4 5 years you can forget about it. But with tokens you also have the chance for some returns in very little time, depending of course on your strategy, and things can evolve and the risk um, uh, can be smaller for your investment. Of course, tokens are very volatile, but if you vet on the team, if they are the right people, if they are ethical, they will work like crazy to make the things work. It's a huge difference between hit and run guys and the guys who are staying days, nights, weekends to make things work. And somehow I resonate with this part, because I'm one of these guys who spends weekends on projects, and I'm looking all the time at like-minded people, and uh, people who are hustlers and they are pushing, so somehow they will make things work. This is the mantra I'm following.
Thank you, Adrian. Hit and run. I really like that. Hit and run. Okay. So I think you brought up a good point, because I never thought about crypto startups, but you brought that up topic. So I just want to know, what's the difference between a early stage crypto startup, like a crypto startup, and a traditional business? What kind of differences do you see? Because I know how what the early stage crypto, I would say crypto startup, because they have a token. Obviously they cannot operate without a blockchain, underlying blockchain, right? They could be Binance chain, it could be Tron, Ethereum, you name it. There are many their own native blockchain as well. But when it comes to comparing an apple to apple, so what kind of differences do you see, a traditional, maybe a SaaS early stage startup versus a crypto startup?
First, it's much easier to get into the blockchain
Hmm.
because you have a lot of code, on open source code in GitHub, so you can copy paste a lot. You don't need to develop stuff from scratch. The same is with SaaS. You can use white label at the beginning, but anyway, the barrier of entry is higher. Plus, you have all these exchanges, all the dexes. You have Telegram, so you can penetrate the marketplace with a very very low initial cost, which is never to be seen, I would say, in the startup world we know, in the known startup world, and also due to the fact that everybody today accepts a call via Zoom or other platforms for pitching, for discussions, for hiring, is much easier also to put such a project in the market if you are in the blockchain and crypto space. And even for regular startups, it's easier than before, because when you start SaaS, if there is not, let's say, a huge innovation, you can have an MVP pretty fast. Said even using a wide label solution first, so to start collecting payments from customers and to move. So most of the barriers, I believe, are in our minds, and we need to dig a lot there to to eliminate those disbeliefs which are holding us back.
Yeah.
We are running towards a world where you can launch a startup very, very easy, both in the traditional one and in the crypto one. But of course, there is a learning curve all the time, because if you look at the statistics, still, I don't know, 80, 90, 95% of startups, they die. And they don't necessarily die because the idea is wrong. They usually die because the founders, they are not ready to pay the price to make that thing successful, including, as I've told, spending nights, weekends, grinding, doing this, doing that. And I've met so many founders who doesn't have any discipline for nothing. They just say, okay, I'm a startup founder, I'm cocky, I will think about if I will let you in, and that's it. Which can be good for law of attraction to see yourself as a millionaire or a billionaire, but usually most of these people are very humble, are very helpful. They have a totally different mindset, and sometimes it's the self-discipline which is destroying those startups, not the bad ideas or the bad economy. Things are starting from within. So it was a very nice finding for me.
Great. Thank you, Adrian. Obviously, I think you emphasizing on the traits of a startup founder, which is very key. You might have that funding, you might have a brilliant idea plus a solution or a product, but as a person who is obviously the captain of the ship, if he is not right, then everything falls apart.
If I may add something on what Adrian was saying, I really agree regarding what you said about the founders team, about the commitment they put in the initiative. They're like also the will to work a lot, in particular in the first phase of the startup. But I want to highlight the fact that, in my opinion, in the same conditions, a traditional startup and a crypto startup, in my opinion, has a big advantage in fundraising. Why? Because if you have this kind of team, really passionate guys that put 110% of them inside the project, but you are a traditional startup, the way of fundraising is the traditional way. So you have to go to angel investor, venture capitalist. They may say yes, they may say no, whatever. If you are a crypto startup, you can also address the market. You can address a community that is worldwide. You can explain your project. You can make them feel the passion you have, the vision you have. And if they share your vision, they may invest. And this is basically also the logic behind crowdfunding. Indeed, in the end, token offerings are an innovative way of crowdfunding. And I think it's really a significant advantage that crypto startups have in comparison to other traditional startups.
So, Nicola, as you are a lawyer as well in crypto space, I know a company. I know, so they are a fund, crypto fund. I think crypto fund. So he moved to Singapore. He was saying he bought the company using tokens. Like he owns like a local company, shares of the company, and he bought it using tokens. But with the traditional startups, you cannot. I mean, I think it's. I'm just asking this question: how easy and difficult it is? Because in traditional, it's only fiat money, it's only cash that works, right? When you are buying it.
It depends a bit on the jurisdiction and on the type of token, because, for example, if the tokens were Bitcoin, I wouldn't see it so difficult to acquire the capital of a company using Bitcoins. It depends. So the nature of the transaction from legal point of view is different. So you're not buying like against money, but is an obligation in kind, it's called. So it's like if you pay the price in gold or in oil, let's say. It's like the most widely spread legal qualification of Bitcoin is as a commodity. But as you may know, the Bill of El Salvador changed a bit the thing, because, for example, now all the countries that recognize El Salvador's sovereignty and they have like legal provisions on foreign currencies, now Bitcoin is basically a foreign currency. Here in Switzerland or in Italy, according to our current legal framework, given the fact that El Salvador recognized Bitcoin as an official currency having a legal tender in their jurisdiction, Bitcoin should be considered as a legal tender in that jurisdiction, and so as a foreign currency in Switzerland, for example.
Yes, I think you brought up the good example of El Salvador. Like, when you go to Wikipedia, you also see Bitcoin as a legal tender over there. Do you think that will lead to mass adoption in that side of the world, Latin America, Southern America?
I've read some interesting articles concerning the fact that developing countries that have not a strong currency could find some advantages in adopting Bitcoin as a currency. We have to underline that also El Salvador, they had US dollar as a currency before, so they didn't have their own currency.
Yeah, I know El Salvador, Ecuador, I guess they also have US dollars. Right. Thank you so much, Nicola. Dr. Shrikant, coming to you. So what kind of trends did you see in 2020, 2021? What kind of investments were made in early stage, and did the investments go up, go down, or were stagnant, were like steady?
So I believe, so this is what happened. So in 2017 and 2016 or 2018 or even 2019 for that particular matter. For 2015, people did not believe in startups at all. So the situation was largely prevalent for what crypto exists or blockchain exists at this particular moment. So in 2019, the whispers started. I mean, one of the family members the riskier family member used to whisper quite vocally, I would say, that the family should start investing in crypto. And now what is happening is the corridors are full of these whispers that are occurring between family members, and everybody's comparing their balance sheet with the other balance sheet, and the other's balance sheet seems to be going up because of crypto assets that they hold. So that is on the crypto part. So yes, there is action which is happening on the crypto. Now we're touching upon a very crucial question, aren't we? Early stage investments in blockchain. I believe the world is beyond crypto. The world is beyond the assets that are created from blockchain. I believe in the use of blockchain to solve a large amount of issues, including health, including last mile delivery, including drone delivery, including say vaccination, including understanding where Sunny is at this particular moment. Could be could be driven by blockchain, and the adoption by the government is quite naturally apprehensive, because the government takes a lot of time to understand. The private players take a lot of time to understand. I take a lot of time to understand how a crypto essentially works, where the server is hosted, and so on and so forth. So I believe there are two markets that are to be captured. One is India, and other is China. And and if you cover these two, you've basically covered 40% of the world's population. And when you talk about say crypto on, or when you talk about blockchain, and when you talk about ensuring everything happens through secure blockchain transactions, you need those that 40% to come in. You need the last mile to actually come in and use your blockchain. You need the I mean, in India we have this wallet drive that happened after the demonetization. I think that needs to occur in China and India, which is very difficult to occur with foreign money, but will eventually occur in the next few years. So early stage investments have happened. I think the checks are being dispatched as we speak, but the determination of the level of equity that this particular early stage investment gets, I'm not too sure whether that has changed much. It is still the same 10 to 30% equity that they seek for, where they seek for that early stage. I haven't seen a term sheet which is being rewritten to have, say, a 1% equity for early stage. I don't
Right.
see that.
Uh, thing is, Dr. Srikant, you mentioned, I mute myself. Like, has anybody got another page open, like a session? Okay, yeah, now it's gone. So you said that family offices are obviously keen on investing or understanding crypto before they can invest. So what kind of questions do you get from them?
So the first question that I get is, what is crypto in the first place? So what
Yeah,
is crypto? What is blockchain? That is the first question that you get from one of the elder members of the family, the patriarchs of the family, I believe. And then you have the young guys who are basically saying that, look, I just became a billionaire by buying this particular company, and I sold it to this particular ventures for X amount. And you have the G3s actually talking about how they've made money.
yeah,
So I think that the conversations that occur are ranging from what is it to how is it, and how can we do it. So it's a very broad range that is occurring. The patriarch is obviously asking the same thing again and again, which is what is it. The G3s are asking the question, which is how much should I invest and how much will I get.
right. Got it. Great, which is good. Family offices venturing into a different asset class. Okay, great. So we just have a few more minutes coming over to early stage. So, Adrian, personally, would you invest into an early stage startup? I mean, they both are in the same. For instance, hypothetically, they are in the crypto space. So, would you invest into an early stage startup, or would you invest into a growth stage startup, like more established, who already have, in terms of crypto, they have social media presence, they have a community, whatever it takes for a crypto startup to grow? Or are you going to invest into early stage startup, and why?
I'm a big fan of early stage because you can see on paper some of the huge companies of tomorrow, and just to make a comeback to a previous idea,
Yeah,
you can buy anything with crypto because sometimes there is an intermediary. For example, in the Middle East, you can buy officially properties with crypto, but if you, I don't know, one of the niches are entrepreneurs in the crypto space or founders of crypto projects. They have nice stakes in crypto. And if they want to purchase, let's say, a startup or a property, they find an exchange or an intermediary. They sell the tokens, and the seller is receiving fiat. Of course, the commission could be 5%, 10%. The price, the market price could be different than the price discussed there. So these are the details. And it's like part of, I would say, a little bit of a mission to involve in early stage, either through investing or advising or mentoring or creating an incubation product, an incubation program, because you have the possibility, and it's an, I would say, an opportunity or a privilege or a chance to see on paper or to work with people at that moment when there's nothing, and to influence something which can become very big. Of course, there is a huge risk here, and the biggest risk is that you will lose your time, not necessarily your money, because money is resource coming back to you, but the time you are spending on a project will never come back, you know. So this is the highest risk. And I would say that it can be a very interesting exercise, because everybody's looking today, even the family offices, which were conservative investors, they see the returns. They have teams of people doing from morning to evening, weekends. They are searching the world to find the next gems, because they need to grow the money of that family office. This is their job at the end of the day. So um, um, everyone's a piece of the next big thing, you know, and because the rate of failure is still high, I would say 80% to 90%, everybody wants a piece of that, I don't know, 5 to 10% becoming successful. So for me, it became part of my DNA. This is one of the reasons that I also support VCTV, which is a very important educational initiative for early stage startups, early stage founders, and not only for investors, and not only a good tool to create connections between people, and is 100% an exercise which is helping the whole ecosystem.
Thank you, Adrian. I think personally, if I were to choose, I would also choose early stage for the reasons, like, you know, growing your baby, right? You know, like, obviously, you know, nurturing it from birth, even though it's not
Exactly.
lot of hard work and a lot of time, as you said, but still that's a different feeling, you know, different job satisfaction. I would say job satisfaction in there when you are, you know, building it from scratch. Thank you, Adrian. Nicola, you see a lot of, obviously, as a lawyer, you do a lot of incorporation, you're probably doing a lot of merger and acquisitions. So what do you see in the crypto world? So when these startups come to you, are they very, very early, or they are, you know, sort of they come to you? I think they come to you. I would think they come to you when they're very early. But what do you see otherwise?
Yeah, it's true. It's also true that so as store partners, we have different type of clients. We have also some big clients, but also we have a lot of like early stage startup that wants to fundraise. I can also explain you a bit of like our procedure. We do an audit both from the business and the legal point of view. So we check the compliance of the project. We also in the case we take them, we also help them to select the jurisdiction, to structure basically the project. And also from the business point of view, we help them with the business model, in setting up the business plan and making it like attractive to investors. We review their pitch, and if everything is fine, then we pass them to our, let's say, club of investors, which is a group of investors we have a, let's say, special relation with. People that we know a lot, that likes to invest in these kind of projects. This is actually really useful, not only because they could invest in the project like directly, but also because they provide feedback. So if they choose not to invest, they will tell us why, And so maybe we can also give some additional suggestions to the startup. After this stage, there are basically two different paths. Or you go through venture capitalists because you want them to invest in equity and to grow, let's say, in this institutional way, or you do a token offering and you grow a bit more on your own, which is something actually that startups nowadays wants to do way more. I've seen this thing, a lot of things they don't want to give away equity. They want to preserve their power in the company and they want to keep the company as there. If they want to accept someone in the company, it's because this person is an angel investor, and so it's not only an investor, but he's also someone that can give them suggestions, consulting, and help them in the end. Let's say traditional investments like I'll only buy a share and that's it, and we will see at the general meeting every year, is something that is not really attractive anymore in the crypto space, I think.
Thank you, Nicola, for sharing those views as well. That's good to know. Dr. Shrikant, coming to you personally, like as I asked Adrian, personally, early stage, if you were to invest into personally into early stage or advise a family office to invest, because they come to you asking, okay, am I going to invest in Bitcoin, crypto, or early stage startup or a growth stage startup? What personally is your advice going to be and why?
I think there are some cultural issues that need to be addressed when you are approaching a family office per se. And Nicola, Adrian, you would agree with me, especially when you're approaching, um, let's assume, a quite seasoned family office or a quite mature family office, which is done investments in commodities, and they have done investment in real estate, which they understand tangible investments. What happens is they can do their due diligences quite easily. It's quite easy to understand the paperwork and to understand what exactly is the company about. So I believe the first hurdle that promoters need to cross in a blockchain or in a crypto is that make them understand that certain things are not understandable, right? These are talking about the .com the evolution of Alibaba and the evolution of that may not be the right example considering that Jack Ma is not here, but the evolution of let's say Amazon in its early days. We are talking about situations where the families, the patriarch just doesn't seem to be understanding. So there is a lot of cultural gap or a knowledge gap that exists. So we as councils, we have a double hat, right? Sometimes, so we have to wear the hat of a performing the checks that we need to secure the family, and b also perform the, I mean, we ourselves need to be abreast of how a crypto works. So we should not be given you know numbers which seems which does not seem plausible at all. So if I think the first hurdle to cross is if I feel conned, or if I feel there is a con in the crypto, or I feel there is a con in the blockchain, then it will never pass. Because if I can see it, then the family office can very well see even more, because they are quite naturally pessimistic.
Yeah, you mean the scammy projects. So, as a closing remarks, Dr. Shrikant, what kind of projects are you working now? Are you involved in any early stage startups that you can share with us?
Yes, absolutely. So I am involved in quite a few blockchain startups which are trying to solve the problems of the government by ensuring there is security in the medical space, in the medtech space, and in the defense space, which requires a lot of because when you have these drones and other things that are going up, you need those surveillance mechanisms to ensure that people do not see. I mean, Area 51 is not seen, right? As simple as that. So I believe you wouldn't believe, Sunny, the government is actually rising up to crypto as compared to the family offices. In family offices, I'm finding it very difficult to convince, but the government seems to be quite convinced with the whole idea, and that's because they feel that any of the project, and if I say that it is a good project, then it must be a good project.
Wow, thank you so much, Dr. Shrikant, for sharing that experience with us. Nicola, same question. As closing remarks, are you working with an early stage startup?
Yeah, I actually work with a lot. I was trying to choose one. So let's cite this one. It's called Diabolo.io. It's a social trading platform and a social trading ecosystem, because they are planning to develop way more services in connection to social trading and copy trading. The team is really passionate. We have been working together for some months, and probably they will do a token offering shortly. So we have completed, let's say, this early stage. They have collected some capital. They have investments both in their equity and the token. They are based here in Switzerland, and I think it's actually a really interesting project.
Thank you. Awesome. Adrian, coming over to you. Same question.
I work with a few projects. The main one is DAO1, which basically is an decentralized autonomous organization in the launch phase, so in the building of everything stage. So it's backed by a software company based in Singapore, by an international team of people, and it was built from ground zero, I would say. Also, I'm working with Festi. Festi is a startup based in Los Angeles. They are doing, they have 2 technology patents. They are doing a smart bracelet for working without internet, connecting groups of people at events. And I believe can connect
Smart
parents with their children.
Adrian, what's that? Sorry to interrupt. A smart
Festi.
bracelet.
A bracelet, yes. So a bracelet.
Oh, okay. Like
a
a
bracelet, working without internet and Wi-Fi. So there are now technologies using the classical radio technology, doing even video calls without internet. Is a very nice trend, and something that is growing like crazy. It's also this trend came also from privacy, but there are technologies like the ones which were used before the GSM telephony, when we had pagers, when we had radio communication, which now are coming back. And you can do a lot of stuff without the internet, which is available worldwide. Is a very interesting trend to look at.
very interesting as well for me to know that.
Yes. We can talk more about it, because it's a very interesting project. And apart from that, I'm part of an incubator program, which is an ongoing. So all the time there are new startups coming. They graduate to the program, and after that they follow different routes. And I'm always searching for projects where I can add value, either connecting them with some people, or working with them, or investing, or connecting with other investors. It's a hustle anyway. It's not easy, but I'm not looking for easy things anyway, because you have to become better. That's the only thing, because the life doesn't get easier when you advance, you need to become better. So I'm not looking for easy things. I'm looking for things to excite me, to say, okay, I'm working on that. I like it like crazy. Doesn't
I like
matter
it like
if it's
crazy.
hard. Sorry?
I really like that. I like it like crazy. Thank you, Adrian. Thank you, Nicola. Thank you, Dr. Shrikant, for sharing your insights today and being on the panel. Really great time with you all. And yes, and that's about VCTV and me. And I'm back again tomorrow for the last show of the week on a special episode tomorrow. So do watch me tomorrow at 8:30 a.m. UK time, where I'll be doing a AMS session with one of the crypto blockchain founders in the voting, like he's got a token which is used by governments in the voting system. So it's a very interesting project. Do catch me tomorrow. And thank you so much for your time. And stay safe, stay happy, healthy, and stay connected. And see you later. Bye-bye.
Thank you,
Bye.
Sonia.
Thank you
Pleasure
very
as
much.
always.
Have a great day. Thank you.